Hi guys, it's Mrs. Kyle again. We're going to work on 1-2 work together today, which again is a little bit of review, except now we're going to do things in departments as opposed to lumping it all together in one corporation. So for example, on page 5 when we read about New Balance, they're going to have a department for apparel, shorts, t-shirts, that stuff, and then they'll have another for sneakers. And when you break it down in departments, you can get a better understanding on who's doing well and who's not, and where can we make changes, or is it time to eliminate a department? Maybe we shouldn't do that, whatnot. So it makes it a lot easier to analyze the information to see what's doing well and where we need to make improvements. All right, so if you would, let's open chapter 1-2 work together, and on your own. Then we're going to open up 1-2 work together. All right, you're going to see we have a couple different journals here. We got our purchases and our general journal. So our purchases journal is only when we are going to buy inventory, things we're going to sell, and we buy it on account. So if you go to Moodle and you go down and you open up under chapter 1, source documents for journals, this will help you out too. You always go with your last source document, and it will tell you which journal you need to be in. It would help if I had receipts spelled right. Whoops. Okay, so back to Applia. And we're turning to page 17 in the textbook, and we're going to go through this together here. It says City Music has 2 departments, disc and tapes. Even though you guys aren't old enough to know what either are, we're going to go with it. Purchases journal, general journal, a partial general ledger and an accounts payable ledger are provided. The balances are recorded as of March 1st of the current year. So first thing, it says journalize each transaction. Source documents are abbreviated as follows: debit memorandum, DM, purchases invoice, P. So first thing, March 1st, we purchased tapes on account from Raymond Wholesalers, $1,350, purchase invoice number 283. Well, we know it's a P, our source document is a P, so we need to make sure that we are in our purchases journal. Okay, so we're going to our purchases journal, and you'll notice this is broken down a little bit different than it was in our first level accounting. And that's because we have our 2 departments, one for disc, one for tapes. So our date is going to be March 1st. We are buying this from Raymond Wholesalers. Our purchase invoice number is 283. You don't need to put the P because only purchase invoice goes in here. Okay? So we are buying $1,350 worth of tapes. So we're going to owe them, Raymond, $1,350. In this case, we're going to put it under tapes. So we know how much that department owes. And accounts payable means you owe them. Transaction number 2. On March 2nd, we purchased disc on account from Artex Music, $965, P284. So our date is the 2nd. We purchased from Artex Music. Purchase number 284. So we are buying $965 worth of disc this time. So we need to make sure that we are in our disc department. So far, so good. Now, on March 5th, we returned some disc to Dade Incorporated, $165 from purchase invoice 280, DM36. So we're returning it. We didn't like them, we didn't need them, duplicates, whatever it may be. So DMs, looking at our sheet here, a DM goes in the general journal. So we're going to drop down, we're going to our general journal. The date we're returning is March 5th. Our document number is BM36. Okay, so we were supposed to pay Dade Incorporated for this. However, we're returning it, so we're no longer going to have to pay them. So it's going to be accounts payable, Dade Incorporated. All right. Remember, we're going to have a slash here in our post reference because we're going to have to post this in 2 spots. we're going to post it in the accounts payable ledger and in the general ledger. We'll get to that in a minute though. So we're returning $165 worth of disc. Oops, 165. So it's going to be called purchases, returns, and allowances. And in this case, it's the disc department. All right. Now on March 6th, we received an allowance on tapes from Raymond Wholesalers, $100 from P283 DM37. So an allowance would be, they're going to give you your money back, however you don't have to return the product. Best example I can think of, if you get something embroidered and they spell your name wrong. Well, they don't want a sweatshirt with Kyle on it, and you don't want a sweatshirt spelled wrong. So they'll give you your money back and let you keep the sweatshirt. So same here with the tapes. So our date is March 6th. We bought them initially from Raymond Wholesalers, so we're no longer going to have to pay Raymond. Our source document is DM37. And it's purchases, returns, and allowances. In this case, it's tapes, though. So they're going to be in tapes. So we're going to pay them $100 less, but we get to keep the tapes that don't work or whatever it may be. So that is an allowance. Next is March 18th. So now we're purchasing tapes on account. So we're buying product that we're going to sell to our customers on account. So we got to go to our purchases journal, and the date is the 18th. We are buying them from Quality Tapes. Our source document is $285. So we're now going to owe Quality Tapes $268, and they are tapes, not disc. So we want to make sure we're in the right department. Now on the 23rd, we purchased tapes on account from Castle Records and Tapes, $993, P286. So we got the 23rd from Castle. Our purchase invoice number is 286. And sorry guys, I lost my spot. $993 worth of tapes. So far, so good. So we have all our transactions journalized. So now it says post the items that are to be posted individually from the purchase journal. Post from the general journal, prove and rule the purchases journal, post the totals. Okay, so what we have to do now is we're going to post the items that are to be posted individually from the purchases journal. Okay, so that means we're going to go to our accounts payable ledger, and we're going to post them for whoever we owe the money to. So we're going to start in order. We'll start with Raymond Wholesalers. So we'll go Raymond Wholesalers. Give me 1 second. I'm just getting the calculator out here. So Raymond Wholesalers. So our date is March 1st. Our post reference is going to be our journal page number. So in this case, it's going to be P3. And it's going to be a credit of $1,350. So we now owe them $1,350. We need to go back up here in our journal and put our post reference, which is our vendor number, of 280. Okay. Then we're going to go to Artec Music. And this is on the 2nd. It's coming from Purchase Journal page 3. It's going to be a credit of $965. We already owed them $480, so now we're going to owe them more money. So when they're the same credit, we add. So we now owe them $1,445. Go back up here and put our account number in our post reference. Moving right along to Quality Tapes. Our date is March 18th. Our post reference is P3. It's going to be a credit, Quality Tapes, of $268. We now owe them $268. post reference up here, 270. And our last one that needs to go in the accounts payable ledger, Castle Records and Tapes. Our date is the 23rd, P3. It's a credit of $993. We already owe them $760, so they're the same. So we are going to add. So they're the same, we're going to add, and it's going to give us $1753 is our new balance that we will have to pay them. The 220 goes up here in our purchases journal. All right, now they want us to post from the general journal. So we're going to switch, we're going over here to our general journal. So our first one is on March 5th. We have to post in accounts payable and in date. So we'll do our accounts payable first. Our date is the 5th. Now it's coming from G3, General Journal, page 3. It's a debit of $165 because we're returning them. So we're going to owe less money. So their opposite, we subtract, which gives us $2,005. So up here in our post reference, we have 2105, and we're also going to put it in date, which is going to be, let's scroll down here. Date is going to be 2/30. All right, so we're going down to date. General Journal still, March 5th. Post reference is G3. It's a debit of $165 because we're going to owe them less money because we're returning them. We no longer want them. So now we owe them $405 because opposites, you subtract. So then we go to our general journal, purchases, returns, and allowances disc. Our date is March 5th. G3. And it is a credit of $165. So our balance, because there was nothing in there, nothing plus $165 gives us $165. Post reference, $51.15. All right, now we got to do it again for Raymond Wholesalers. So we're going to accounts payable. Our date is March 6th. We're getting it from G3. Debit of $100. They're opposite. So now we owe $19.05. And then we got to also put that down here in Raymond. Raymond Wholesalers. March 6th, G3, and it is a debit of $100. Opposite, we're subtract. We now owe them $12.50. Go ahead and we post ref, $21.05 and $2.80. And then back to purchases, returns, allowances, but we're in the tape department now. So it's March 6th. Post reference is G3. And now it's a credit of $100, and our balance is now a credit of $100. Go up here, put $52.15. So far, so good. All right, the next thing they want us to do is prove and rule the purchases journal. So we're going back to our purchases journal, and we need to total. March has 31 days, so we're going to do it at the end of the month. It's going to be totals. And we're just going to add our columns down. All right, so you're adding up all of your accounts payable, which will give us $3,576. Our disc is $965, and our tapes is $2611. So remember, our two debits right here have to equal our one credit. If they don't, you know you did something wrong. It's the beauty of accounting. There's only one answer. And you got to make sure that debits always equal credits. So now they want us to post our totals. So we're going to go accounts payable credit, so our general ledger, accounts payable. Our date is the 31st. It's coming from purchases journal, page 3. Page 3. It's a credit, because in the account title right here, it tells us accounts payable credit, $35.76. Our balance is a credit, so it's the same. We're going to add, and we get 54.81. Go up top, parentheses now. Got to hold the shift button down. 2105 for your post reference. So now we go to purchases disc. Date is March 31st. Coming from P3, and it is a debit of $965. So our balance is now a debit of $965. Parentheses, 5105. Same thing, let's go to purchases tapes. March 31st. Post reference is P3. Debit of 2611. So our new balance is 2611. Going up top, parentheses, 5205. All right. It says we need to hold on to these ledgers because they are going to be used in the on your own, which I am going to take for a grade for you guys. So first thing, let's go down, let's check our answers. And woo, we got a 23 out of 23. All right, so you'll do your on your own, and I'll be graded. Again, if you have any questions, contact me, seek out help from one of your classmates. If you're over at Trader, come down and see me, and we can get this taken care of. All right, thanks, guys. Have a good one.